panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today is October 10th. It's almost 1 o'clock, and we're going to do another episode of CFRN Thursday. And what we do is the next hour, we're going to go over the CFRN trade setup in slow motion. Okay, there was a demand for this over the years. What I noticed, of course, my phone starts buzzing. Over the years, what had ended up happening is we saw several hand raises where people said, hey, slow things down, slow things down, slow things down. I'm on the trial, things are going too fast. I can't absorb everything. So ultimately what I did, I said, you know what, I'll pull the car over and I'll spend an hour every Thursday going over the setup in slow motion. So that's kind of how it originated. I've been in the room since day one. I'm in the room every day. I'm just in the background. I let Mike and Dwayne do their thing. Valerie's in the background too. On occasion I'll pop in and just say, hey, point this out or point that out. But I kind of sit in the background. But like I said, I've been around from day one, so I know the trade setup. I also know that over the years, as people have gone through the training, some common traps that people fall into. So I've identified those, and what I'll end up doing is going over those too this afternoon. So the game plan is this. Number one, we are going to go over the trade setup. Okay, 4 simple rules. Okay, so we'll knock that out. If you are brand new, especially if you're on the trial, this is a good syllabus or cheat sheet for you to lean on, because I'm going to go over the setup, the same setup that Michael's doing in the training room, but I'm going to break it down in slow motion. Okay, so you'll hear some of the buzzwords that Michael has gone over. You'll hear it from me, and maybe you'll understand the reasoning behind it once I get done with it. Okay, and then once we're done with that, then we're going to pop into a live market, and we'll look for that same setup, and we'll get in there, and I'll get inside this DOM. This is what we call the DOM. This is where we do our buying and selling. So if we get a bullish setup, you're going to see me left or right click in the green, and if we get something that says go short, well, I'll left and right click in the red. So the idea is we'll get inside the DOM, and I'll show you how to place a trade and where to put the stop and how to manage it from start to finish. So that's kind of the game plan. And then along the way, like I said, I'm going to go over some common traps that people fall into. Okay, so and hopefully in the end, especially if you're on trial, hopefully you'll absorb what's going on during that 5-day trial. So at the end, when you do get the offering from CFRN, your eyes are wide open. You can make a decision on whether you want to pursue this or not. That's the goal. Before I present, I do have to go over the disclosure documents, disclosure pages. There's 2 slides. I could just say, hey, take a look at it and then shove them underneath the blanket. Honestly, I've been doing this for almost 25 years, so I really have seen the good, the bad, and the ugly when it comes to this business. So I don't take it lightly. So I take the 5 or 10 minutes to go over it, because the disclaimer is really meant for the guys that are brand spanking new, that are just entering into our space. Okay, the guys that are knocking on the CFRN door, a lot of them have already been through the battle. They've been through this guy and that guy and this guru and this guru, and by the time they come to our door, they're pretty numb. They understand the disclaimer. They understand the risks. They understand the losses that are associated with trading. Okay, but if you're brand new, again, this is an eyes wide open approach webinar. So I know it's not a juicy way to start a webinar, but it's real. Okay, and you should understand what the risks that are associated with it. So basically, the disclaimer says this: if you're not using stop losses, if you don't have a trading plan, if you're not engaged in the marketplace, if you're not familiar with what the news items are for the day, if you're not engaged in your trading account, this disclaimer is going to hit you right smack dab in the face. Okay? That's what it says. You can lose everything and some in your trading account if you don't have some of those simple things that I've just outlined. Okay? Now, the good thing is, we're going down the CFRN path, right? So we are going to have a set of rules, right? So we're going to have a trading plan, so that checks that box. Every trade has an 8-tick stop attached to it. Well, that kind of checks that box too. We're going to be looking at the market under a 4-tick range chart. So that means we're going to have to be actively engaged in the market. We're looking at the market under a microscope. So you have to be in front of the screens. It checks that box too. One of the rules that's set out by CFRN is they don't trade around news reports. Well, that checks that box. And in the end, if all hell breaks loose, something does come out and the market does go into a tailspin, at least you're in front of the screens, because you have to be engaged, right? You'll be in front of this tower here. This is where we do all our buying and selling. And if the worst case scenario happens, at least you're in front of the screens and you can hit exit at market and cancel and get the heck out of Dodge. Okay? So there is a disclaimer out there, right? You can lose everything and some if you're in your trading account if you're not doing those 5 simple things that I just talked about. The good thing is you're going to water that down a little bit if you go down the CFRN path. Okay? It doesn't eliminate it altogether. Okay, so let's be clear about that. You can have stop losses in. You can be in front of the screens. You can be doing all the right things. And like I said, if that worst case scenario happens, okay, that could still be a risk hit. Okay, you could still have some exposure in the marketplace. Okay, so that's why that's why we talk about that thing. Okay, I know a lot of the guys, they get juicy emails and advertising and marketing pieces that, this is a great way of, getting in the markets, easy, and you can make tons of money, but they really don't check this box, okay? They don't say, hey, here's the risks that are associated with it, because you are dealing with a leveraged market here, okay? So that's my long-winded explanation of the disclaimer. The other thing is, too, is past performance is not necessarily indicative of future results. That's highlighted in red. I have to say something about that. Sorry, I wanted to get that off my mind. And then the last thing is, that the capital that you put in a trading account should indeed be risk capital. It should be money that you can afford to lose. And if you do, it's not going to change your lifestyle. Okay, you'll be able to still pay your bills. Okay, so those are the kind of the nuts and bolts of the disclaimer that we have to talk about. And I have to do that before I present anything because I'm a registered guy, and that's what we're supposed to do. This last one is my relationship with CFRN, which I like to talk about because sometimes people get us confused. I am Birds. I work for Daniels Trading. That's who I am. Okay. CFRN, Dwayne and Mike, okay, they're over here. Okay. It's their indicators, it's their software, it's their education, it's their trading tools. Dwayne and Mike don't work for Daniels Trading, and Bert doesn't work for CFRN. We do have a close relationship, but there is a line, okay, that we don't cross, and we can't, okay? So that's why we have to talk about that. Now, like I said, I've been around from day one, okay? I support the platform. That's my role. Here it is right here, okay? This is DtPro. The indicator sets are on here. Okay? With 2 clicks of a button, you can have the indicators set on the platform. Okay, it's that simple. It's the same platform that Michael and Dwayne use. Okay. When I started, it was just the radio program, and I was on the radio program, and we were just talking shop. We were talking about markets and just answering questions. But the common thing, or one thing I always saw was in the question box, people kept asking Dwayne, "Can you teach us how to do this? Can you teach us how to do this? Can you teach us how to do this?" And in the end, we got together with Michael, and they were trade station developers, and our platform reads easy language. So I just happened to be in the right place at the right time. They were able to offer a platform that's free, okay, and it has all the bells and whistles, okay. So it was a perfect. It was kind of perfect timing, okay. So I support the platform. If you decide to go on down the CFRN path, if you have trouble downloading the indicators or the platform, you're going to reach out to me directly. It's nice to know that you can call somebody, get a live person on the phone and say, "Hey, I need help." And I go a step further and say, "Hey, if you need additional help, we'll do a screen share. We'll do a private one-on-one GoToWebinar, and I'll jump on your desktop and I'll show you how to do everything." So I kind of spoil you here at the desk too. The indicators are available on Ninja, but Ninja is kind of a do-it-yourself kind of platform. Okay, we exchange emails with support and hopefully get the right answers. Okay, so not only do we support the platform, the execution too. So if you decide that, hey, I'm going to go down the CFRN path and I'm going to use DtPro, what's the next step? Well, the next step is ultimately to open up a trading account, and I handle that business too. Okay, does everyone use Bert from Daniel's Trading? No, they don't. Some people are just married to Ninja Trader. They'll stay with them no matter what, and that's your preference. Okay, so just to be honest with you, it is what it is. Man, I got off into a tangent there. So, and then if there's anything that has to do with the website, like anything on the CFRN website, the passport or Logic 247 that you're seeing in front of you, okay, that is right here. Anything there, you would reach out to CFRN. If you decide, hey, I'm going to go down the CFRN path, who do I pay? Well, you'll go directly to them. The CFRN, the Thursday night workshops, directly to them. Okay, so again, there is that fine line, and that's why I'm disclosing it, and that's why I have to talk about that. It is fair game, and people do this a lot. If they're trying to get a hold of Michael or Dwayne, they can't get a hold of them for whatever reason, it's okay to call me. Okay, I might be able to answer the question. Okay, if it's trade related, for sure. But if it's something on their website, just let me know, and I'll text them, and I'll say, hey, Bart is looking for you. Give him a call. He needs help with this or that. Okay, so that's fair game. So just letting you know. So that's it. That wraps that up as far as the disclaimers. Okay. Again, it's not a cool way to start a webinar. I'm supposed to get you all excited and crazy, but this is an eyes wide open approach, and it starts with the risks that are associated with trading. And again, I don't like to gloss over it. So let me take a sip of water. All right. So let's break down trade setup. Okay. If you have questions, just pop them inside the question box. Okay. Happy to answer them. I've seen them all. So everything's fair game. Let me get my marker. A side note here. This is live. My phone starts buzzing. I am going to have to put you on hold and hit the mute button. Not being rude, just giving you kind of advance warning. And the markets are moving. So, okay. The trade setup. You guys, here's your cheat sheet or syllabus. Okay. So let's start off with the time frame. Okay, we are on a 4-tick range chart. Okay, so how do you get there if you have DtPro? Okay, chances are you might be on an hourly, you might be on a daily, probably on a time-based chart. Okay, the way you get down to a 4-tick range chart is next to the time frame. Say you're on a 30-minute chart because you're on Logic 247. Just hit the drop-down box and go down to Custom, but select Range Bar. Make that one look like a 4. Hit OK, and right now you're staring at the S&P Mini in a 4-tick range. Okay, that is the time frame that Michael is on inside the training room. Okay, the reason is the height of each candle, no matter how small or how big they look, it's 4 ticks in height. Okay, so why is that important? Inside the training room, you're going to hear, on occasion, you're going to hear Mike call out the highs and possibly the lows of then the current bar. Okay, what he's ultimately doing, he's getting ready to place an order. He's being proactive because he knows that the height of each candle is going to be 4 ticks in height. All right. So what he can do is, if all the rules are in play, all the rules are these rules. If they're all in play, whether it's a bullish setup or a bearish setup, if they're all in play, what he'll end up doing is he'll end up placing an order above or below the current market price. So if the market takes off, he's going to be stopped into the trade, okay, the entry of it. If the market breaks down because we have a bearish setup, he's going to be entered, get in on a stop, and a short position will be created. Okay, so he's being proactive in placing orders. Okay, over the years, what I noticed is some people would question him, how did you get into this trade? It just took off, right? There's no way you could have gotten in that trade. Well, there is actually. By placing a buy stop or a sell stop below or above the current market price, he's able to do this. Okay, so that's what he's doing, and that's why I'm bringing it to the table right now. When you start hearing him call out the highs and low of the current bar, he's getting ready. He's getting ready to place an order. Okay, so be prepared for that. So that's one of the big reasons of the 4-tick range, is that he can be a little bit predictive or proactive in placing orders in advance. Okay, so that's the first step, the time frame, 4-tick range. Now the top portion of the chart. Okay, so some buzzwords here. The green line is referred to as the BBC. Okay, that is short for bullish and bearish cross. Okay, the red and blue line is referred to as an MA1. Okay, together they make up step number 1, which is this. This sets the ball in motion. This lights the match. Okay, when the MA1 crosses the BBC and it's red, it's a bearish cross. You're looking for shorting opportunities. Okay, when the MA1 is blue and crossing the BBC, you're looking for, that's a bullish cross, so then you're looking for bullish opportunities. So the one that's highlighted here, that's a bearish cross because the MA1 is red and crossing the BBC. Okay, so you're looking for a shorting opportunity. Okay, so note, I didn't say get short, get long, get short. Okay, I said we're looking for an opportunity to get long or short, because that leads us into step number 2, which is this. After the cross, okay, we call this a bearish cross because the MA1 is red. The normal thing for the market to do is ultimately gravitate toward the BBC or the green line. So what we're training ourselves to do is look for the normal thing, which is for the market to get into the green line, touch it like it does here, and then close in the direction of the trend, highlighted by this arrow. Okay, That is the step number 2 we're looking for. So again, step 1 is the cross. Okay, our spidey senses go up and say, hey, we need to be looking for a shorting opportunity. The next thing that we're looking for is for the market to attack that green line. And not only attack it, but then close in the direction of the trend. Okay, that's where we're at in the process. Okay, now, a few curveballs here, right? Sometimes the market has so much bullish or bearish momentum, it won't get to the green line. And it does one of these. It gets maybe halfway there and then falls down. Okay? What you're going to learn, and this is what I'm going to hammer this afternoon, is that once you get this cross, that's step number 1, and as the market starts gravitating toward that BBC or that green line, you're going to get in the habit of drawing trend lines. And you're going to see Michael do this in the training room. And that's why we're talking about it now. Because if the market has so much bearish momentum and we cannot get to that green line, and we close on the other side of the trend line, okay, there's action to take. Okay, there's potential action to take. All right, there's that call. So 1 second. Paul, call back. Okay, call back in about an hour, okay? All right, that's Paul. All right, so we're drawing trend lines. We're getting in the habit of drawing trend lines because we never know if it's going to do the normal thing and get back to the BBC or not. If it does, fine. Okay, cool. But if it doesn't and it fails in this example, then there's potential action to take. All right, so we have to be prepared for it. Okay, so step number 1 is the cross. Step 2, let me get the marker out. Step 2 is a pullback to the BBC and a close in the direction of the trend. Okay, once you get step 1 and step 2 into play, our eyes then gravitate toward the slingshot, which is the oscillator portion of the trade setup. And basically, the trade setup exists down here. And I'm going to show you why in a second. Put some buzzwords here, okay? The red and blue line is referred to as a cycle. The green line, well, it's just the green line. It doesn't have a fancy word to it, label to it. But here's the scoop. What the cycle is telling us, when it's red and it has a nice slope to it, it's saying, look, dude, the momentum is bearish. Okay, and it's bearish because this is a red color. Okay, if it was blue, it would say, hey, the momentum's bullish. Okay, so that's what the cycle is telling us. All right, we're in a bearish momentum. The green line pulling away in conjunction with this price action here, okay, is saying this pullback, which is normal, and a close in the direction of the trend, okay, with that red candle, the down close, at the BBC where it's supposed to reject, okay, this pull away here is just telling you this is a pullback, okay, pullback in this ongoing downtrend, okay, and with the close of this candle and the green line being pulled away from the cycle like a slingshot, that's where the word comes from, the green line is being pulled away from the cycle. That is step number 3, and that is the divergence or the separation that Michael is talking about in the room. This is a pullback in the ongoing downtrend. And once you get this down close, and once you get this separation, okay, this arrow is the divergence that he's referring to, it's time to get short. It's time to get short the market. You know why? Because the normal thing for this green line to do is to pull away and then ultimately come down and close the gap. Go down and touch the cycle. And in doing so, price action should follow the green line and make a new pivot low. And when the green line intersects the cycle, this is the point where we cut the trade loose. Right here. Okay? Well, why? Because what we expect to happen again is this. The green line pulls away, gets into the cycle. Pulls away, gets into the cycle. Pulls away, gets into the cycle. Until, the momentum's turned. Now it's a bullish setup. Now we should be looking to buy pullbacks. So what we would expect to happen is this. We look for the green line to pull away from the cycle underneath it, just like this. So in the end, what we end up doing is selling this top, selling this top, selling this top, buying this dip, and buying this dip. And every time, every time it gets into the cycle here and here and here or here and here, that's where we're cutting it loose. So that's why the trade exists down here in the slingshot. This is telling us a lot of information. Price action is following along with it. Okay? That's the scoop. All right? That's the trade. Now, none of this takes place, okay, unless, actually, if there's one thing that you should have on a piece of paper, should be on the top of that piece of paper, should be trending. The market should be trending before we push any buttons, period. That market better be making lower lows if we're getting bearish setups, and the market better be making higher highs if we're buying dips. Okay? If it's not doing that, no trade, period. And you know what? It sounds easy, and it's easy to explain, but in the heat of battle, okay, it's not so easy. And you know what? That's one of the biggest traps that people fall into. So what I'm going to show you, what I'm going to tell you is, I'm going to show you how to get in the habit of zooming out, okay? Looking at more of the landscape of what's going on. It's a simple thing you need to do, but I think it'll keep you out of that trap, okay? So, so the trade exists down here in the slingshot, okay? Now, as outlined, every trade has an 8-tick stop attached to it. So that means if you're brand new to the game, and if you're trading the gold or the crude, if you're dead wrong, you're risking $80 a contract. If it's the S&P, it's $100. If you're trading the mini Dow, it's closer to 40, or the euro, that's $40. Okay, but every trade has an 8-tick stop attached to it. Okay, no matter what. And I'm going to show you how to build a bracket inside our DOM. So once you get into the trade, it's automatically going to put that stop in it. Okay, it'll automatically put the stop right behind it. See, right here, get long the ES, it puts a stop right behind it no matter what. Okay, so I'll show you how to do that. Okay, so in the end, okay, you're brand new, day 1, day 2 of the trial. What am I signing up for? Well, you're not going to learn to pick the top, and you're not going to learn to pick the bottom. That's not what you're here for. And you're not going to learn to trade it from point A to point Z. You're actually going to learn to take a piece out of the middle. That's what you're signing up for. You're on a 4-tick range chart, right? So you're looking at the market under a microscope. So you're going to end up scalping. That's what you're signing up for. And you're going to be using aggressive risk management. Okay, well, we know that we have an 8-tick stop behind everything. I didn't even go behind the money management rules. I'll show you that once we get into a trade. Okay, but you're going to be moving the stop, moving the stop, moving the stop, moving the stop. Okay, so what does that mean? That means, well, you're going to have to be glued to the screen. You're going to have to be engaged in the marketplace. You're signing up to scalp. Okay, you're going to have to learn how to trade off the DOM, right? Because you're using aggressive risk management, chances are you're going to have a lot of stop outs, whether they're break even or +1 or -8, whatever the deal is, you're going to potentially do a lot of trades. And that's what you're signing up for when you go down this path. Okay. Now, can you use this on larger time frames? Absolutely. The same rules apply on larger time frames. It could be hourlies, it could be dailies. So if you like that sort of thing too, that is fair game. Okay. Nothing changes. The rules are still the same. Okay. But as far as the training room is concerned, we're on a 4-tick range chart. Okay. We have a set of rules. These are the rules that Michael is using inside the training room, and that's why we're going over them. Okay. So that's the scoop. That's what you're seeing in the training room every morning. Okay. It's broken down there. Now we're gonna pop in a live environment and see what we could do. Okay. So what I'm gonna do, I'm gonna shut down the live account. Okay, I'm going into demo mode. Okay, I don't want to push any buttons, and I want to stay in demo mode. Okay, so that's what we're doing. All right. So as I said earlier, the first thing that should be on your piece of paper is, or should be, is the market trending? Are we making higher highs and lower lows? Okay. So here's what I want you to get in a good habit of doing. Hitting this red magnifying glass. You're going to hit the zoom out button, and you're going to do that so you can see what's going on over here left. A lot of times what happens is you get hypnotized by the charts. Okay, they're blowing up in Michael's workspace. You'll see 4 of them floating side by side by side. Okay, you'll see this. They're blowing up pretty good. So you really got the market under a microscope. Okay, you really can't tell if we're trending or not. You can see some lower lows. Okay, right? We can see a lower low here. But if you take a few minutes to zoom out, what might look to be trending here. 1, 2, 3. Support here, support here. Okay? So no, I don't think this market's trending right now. Okay? And I think you're seeing the results of it. It's starting to we're stuck in a range here. Okay? So this is the first trap people fall into. That's why I'm pointing it out. A solution? Get in the habit of hitting the zoom out button. You'll see a little bit more of what's going on to the left. Okay? You get hypnotized by this. Okay? In fact, here's a good example of it. Here's the normal thing. The market's pulling back to the BBC, and you have the down close, right? All right. People might have gotten tempted to get short here. The result is a stop out. Why? Well, all they had to do was hit the zoom out button and go, holy smokes, we found a little bit of support over here about 30 minutes ago. Okay? The market's not trending, so stay away from it. It should be easy and obvious. That's my best explanation to it. It has to be easy and obvious. It has to hit you right in the face. Okay? All right. So right now, the S&P is trading sideways. We're finding some resistance at the old high here. However, we do have step 1 here, right? We have a bullish cross. Okay? That means the MA1 is blue and crossing the BBC. That's step number 1 right there. Okay? The normal thing for the market to do after the cross is what? Pull back to the BBC or the green line. What did I say earlier? A good habit to get into after the cross is to engage the trend line. That's by left-clicking this little gadget over here. Why do we do that? Well, we don't know if it'll get back to the BBC. Okay? So we have to be prepared for that. So we're waiting for the market to gravitate toward that green line so we could draw a trend line. Okay? That's what we want to do. That's our next step. Prepare ourselves for that. Okay? Do we have any bullish divergence down below? No, but what we do have is a nice cycle that is blue that has a pretty good slope to it. Right? Is the green line underneath it? No, it's not. The green line should be underneath it. It will if the market starts going toward that green line. Okay? The green line will start building. Okay? So, let's see what happens here. Okay, right now, no, I want to see a little bit more action above this high. But you know, if this sucker pulls back, we'll draw a trend line and we'll see what happens, okay? So I don't want you to push any buttons. I just want you to follow along, okay? And the reason why you're not going to push buttons is I'm telling you, I don't think, okay, we're trending. We're trading sideways. This isn't one that's easy and obvious, but it has a lot of potential to it. So it's a good example to start off with. And if it does, then I'm going to jump inside the DOM and show you how to build this sucker, okay, how to get in. But you aren't going to do anything. You're just going to watch me. So here's the trend line. This is how your trend line should look, okay? That's the start of it. So again, how do you engage the trend line? If you have DtPro, just left click over there, okay? If you get another down close here, you can have a trend line to draw against. So let's see what happens. Do we have the divergence? Yes, the green line is now below the cycle. Okay, the green line is blue and it's below the cycle, so that is good. So 1 second. Okay. All right. Now we could draw. All right. We have the divergence. We have the bullish cross. So if we get an up close here, okay, then it's game on to the upside. Okay. All the rules are there. Now here's what Michael does. Listen up. The low is 35.75. Okay. Then the high would be 36.75. So what Michael would end up doing is right-clicking in the green at 37. Okay. If the low is 29.35.75, then the high will be 36.75. Your buy stop is 37. Will that be above the trend line? Absolutely. Okay. So this is one way he's being proactive. Now, notice when I hit this little Tinker Toy triangle up on top of the DOM, the bottom of the DOM opens up and closes. Okay, that's my way of creating a bracket. If I check the sell stop and the buy stop button here, down below, this is where my mouse is, just those two boxes, and if you right click over that and put factor in ticks and factor in ticks and make those factors an 8, as soon as I get into the market, it's going to put my stop loss 8 ticks right behind it. So I don't have to do any heavy lifting. Okay, it's right there. Okay, so if this trade qualifies and we get long, my stop loss will be released. Okay. Hold on. I'm going to do something real quick. Hopefully, got away from me. All right. So let me cancel the order because it happened too fast. All right. Here was the up close on the green line. Okay, that is step number 2. Step 3, bullish cycle. Here's the pull away. That is the divergence. Okay, So on the close of this candle, right here was the entry. Okay, I was too slow on the draw. Okay, right there is the entry. Okay, what we expect to happen, right? The rule is green line is supposed to pull away and then get into the cycle, right? The cycle will start extending this way. And in doing so, the market would make a new pivot high. When these two cross each other, we exit the trade, right? All right, that's the game plan, right? Rules of engagement, the money management portion of this, right? Once you get into the trade would have been right here. If the market goes plus 4 ticks in your favor, you move the stop to break even, okay? In this example, it would have. It would have went to plus 4 ticks in your favor, and your stop would have been at the entry, right where you got in. The other rule set is, if we close on the other side of this MA1, remember that's the red and blue line, okay? Then you also move the stop to your entry or break even, okay? Now, as I said earlier, I didn't think this market was trending. If the market was blown up like this, you were looking at a chart like this, you're on this one right here, right now, at 35.75. Okay, you're long. As I said earlier, you take a few moments to click out, but you will see that the market is actually sideways. Okay, there's that trap. And that's why I said don't push any buttons, just follow along. Because I'm telling you, this is a common trap that people fall into. Okay, if you're not sure if a market's trending, look at the dynamic support and resistance dots and see how they're side by side. That'll be a clue. If they look something like this, that's your first clue that the market is not trending. Okay? So, I am not surprised that this market is doing what it's doing because we're not trending, period. Okay? So, that was a good first start. We didn't do anything, but it had a lot of the components to what I was looking for. I got a chance to get into the DOM. I didn't get a chance actually to push a button, but I tried. All right? So again, labor over the point, market needs to be trending. And once you get that cross, whether it's a bullish or bearish cross, engage the trend line. We want to get ready to draw a trend line. All right. So she's done an about face, and as you can tell, we have a bearish cross. Okay. So the MA1 is red and crossing the BBC. The next course of business, activate the trend line and get ready to draw. Okay, so let's see what happens. Nope, we want to start flagging toward that green line. We got a red cycle, so that would be good for the home team. And as you can tell, if the market starts moving toward that green line, our green line here, if it starts gravitating toward the BBC, our green line will start creating that bearish divergence. But are we trending? No. We're at hold support. If we start breaking these low and start spending some time underneath here, then we can get excited maybe about this trade. Okay? All right. Let's not start this. We'll come back to it. Let's look at some other markets, okay, that might be a little bit more easy and obvious to us. Okay. Here's the gold on a 4-tick range. Notice the first thing I do is zoom out. Okay? This one is trending. Okay, we're making lower lows. That's good. All right. Here's the scoop. Here's the other trap that I see right away. So let's blow this up. All right. The normal thing for the market to do is gravitate toward the BBC. We know we are supposed to draw a trend line, correct? All right. Something to think about is this. There's the down close against the BBC. Something has changed. The cycle isn't red anymore. It was red back here, right? It's turned blue. Okay? And not only that, man, it's got a pretty bullish slope to it, right? I mean, if I were getting long, I'd want to see this action. Okay? But we have this signal to get short. Okay? If you're faced with a different color cycle, okay, if it's blue, a trend line is required. That's part of the rule set. So that is another reason why we draw trend lines. One reason is it may never get to the BBC and fall. But the other reason is the cycle might turn blue on us. It might turn a different color. If it turns color on you, as long as it's flat, that's fine. Okay, that's fair game. I'll also tell you this, if it turns color on you, it's watering down the probabilities of the trade. Okay, so ideally you want everything to be the same color. Okay, that stacks all the probabilities in your corner. If she starts turning color on you like this here, that's fine. A trend line is required, and a close below the trend line better happen before you push any buttons. Okay, that's required. Here's the second disqualifier. Okay, if she starts curling up at a 45-degree angle like you're seeing here, no trade, period. That's another trap that people will fall into. Okay, in the training room, Michael is taking trades. They're blue, they're red, blue, the cycle. They might be curled up. The rule, the definition is a 45-degree angle. If it's against you at a 45-degree angle, you're not supposed to take the trade. Okay? Now, a guy in the heat of battle is going to go, man, I don't know if that's 45 degrees. It looks like 35 or 30 or 25. How am I supposed to know this? There's so many rules going on and the market's moving. Go back to what I just said 2 minutes ago. It has to be easy and obvious. If you're even entertaining that question, whether it's 45-degree angle, it's not easy and obvious, right? Don't take the trade. You're on a 4-tick range chart. You got about 20 different markets to look at. Don't take the trade. Period. Okay? It's got to be easy and obvious. Okay? But this is a trap that people fall into for whatever reason. They get excited because it did the normal thing. They drew the trend line, okay, but they forgot the slope of it. And you know, sometimes it works. Sometimes it falls apart. And then you're going to go, man, that Bert dude on Thursday said not to take the trade, and I would have made 8 ticks. More times than not, it'll trade sideways or against you. It may result in a break even, but a lot of times it'll work against you. So my observation from being in the room from day one would be, don't do it. It's your call. Okay? But if here's a guy that looks at screenshots all the time, is evaluating people's trades, and this is a common problem. So consider that. Please consider that. Okay? If you're struggling, that might be one of the reasons. All right. So enough of that. Go over to crude oil. Okay? Zoom out, zoom out, zoom out. We are making some higher highs here. We weren't. Right? Here's a double top. We got over that double top right here. Okay? So that was a legitimate, hey, we're trending up here. Okay? That's legit right here. Okay? So the pullback, erase. That's what I want to do. The pullback, again, is here. That is a good example right here. Bullish cross, pull back to the BBC, we engage the trend line. We do it because we don't know if it's going to get back to the green line or the BBC. It's blue. The cycle is blue. It's got a good slope to it. It's got divergence. The green line's pulling away. There's the up close. Go long right here. Okay? The normal thing for the green line to do is to get into the cycle. It'd be at this point, we would cut it loose. The normal thing for the market to do is to make a new pivot high. That's the trade right there. Okay, we just got to it a little bit late. All right, so let's go fishing somewhere else here. It's easy to go backwards. Again, there's that pullback to the BBC right here with the down close. However, we do have a double bottom here. No, I would have not taken action there because of the double bottom. Okay, if you zoom out, okay, if we get under dynamic support, the natural gas will tell me we're trending, and we'll look at shorting opportunities. Okay, let's go back to the crazy indices right now. Zoom out, zoom out, zoom out. Okay, here's a double bottom. We got under the low by a shade, but again, we're still finding support around that trend line. Okay, by this old low. So again, right there, I just, that one doesn't hit me right in the face. I'll let you know when I see something that looks right. Looks juicy. All right, let's go to the currencies just because that's what we want to do. We're making some lower lows here. That's fine. Okay, so we can blow this up a little bit. Okay, so we need the green line. We need the price action to get closer to the green line here. We want the close little action toward the BBC. The British pound. All right, Dwayne, let me minimize that. Here is the pullback to the BBC. So let's just do this. Let's get dirty and all right. This will give me an opportunity to get inside the DOM and show you how to move a stop. All right. So let me break this down a little bit. This isn't easy and obvious because we have resistance here. We have resistance here. So no, you guys shouldn't be pushing any buttons, but I want to show you how to place a trade. Okay, just follow along. All right, so bottom line is here. It has some good stuff here. So let's point a few of them out. Step one, bullish cross. Okay, you engage the trend line. Okay, engage it, start drawing a trend line, right? Here's our first attempt. Here's the pullback to the BBC, which is normal. Here is the up close. Is the cycle blue? Yes, it is. Does it have a nice slope to it? Yes, it does. Is the green line pulling away? Yes. Do we have space? We do. There's the separation or divergence that Michael was talking about. Okay, this is a legitimate go-long trade. It's not easy and obvious because we really don't have any higher highs. Okay, so this can come into question. So you have to be very careful. So what I did was I left-clicked in the green. All right. Notice this is my entry, and there's that 8-tick stop behind it. That was set by this bracket option up here above. When I check sell stop, check buy stop, right? We went through this, and we put factor in ticks. Notice my factors are 8. As soon as I got in, the stop was released. I have a stop order in. If you're brand new to DtPro, working orders, this box should be open. It should be minimized. It should be somewhere where you can find it. Okay? Here's our stop loss. Here it is in the working orders box. If we close out a trade, this box should be red, or it should be blank. It should be 0. Grayed out. Okay? If we have a loose end, okay, we have something in a different market working, it's going to be in this box. Okay? The rules of engagement are +4 ticks in our favor, okay, or a close on the other side of the MA1. The MA1 is this red line. we get a close above it, we'll move our stop. So the question is, how do I move the stop? It's easy. Here's what Michael is doing. All you have to do is put your mouse over the number 1 here. Left click, hold the mouse down, and drag it. Release it. Drag it. Release it. Okay? Drag it. Release it. That's all you have to do. Okay? That's it. So for the moment, it's 8 ticks away. All right? How do I know I'm long? It says it right here. It says it right here. Your P&L will be moving. It even shows you right here on the chart. There's about 4 different places where it says, dude, you're long the British pound right now. Okay? So it's pretty obvious. All right. So we're long. And as I said, it was a good time. It's got a lot of good variables to it, right? But again, I'm not so convinced this is an easy and obvious setup. Why? Because we did have some resistance here. We reacted off of it pretty good, don't you think? And look at that move. Okay, so I would rather have seen it get through dynamic resistance, these red dots, before I thought, yeah, that's that easy and obvious setup. But it gives me an opportunity to show you how to get into the trade, how to evaluate the trade, how to move the Dom back and forth. So instead of staring at the pound, I'll let that move here a little bit. We'll go somewhere else. Gold. Okay. Nope, we have to make a lower low before we can get excited about the gold. Crazy indices. Zoom out, zoom out, zoom out. Let's let it get under dynamic support before we start engaging in, trying to get in the short side. Okay. Maybe it doesn't. Crude oil. Here's the pullback to the BBC, right? Here's your trend line. This is a good example. Okay? That's how your trend line should look. Wick, wick. Uh-oh. We have a red cycle. The trend line is required, but we've created some good habits, right? We've already drawn it. So this tells us 2 things. Number 1, it's a different color. It waters down the probability. 2, because it's a different color, it has to close on the other side of the trend line before we take action. So that has to happen. All right? And number 3, what we have to be on the lookout for is if this red, it's going to turn red and starts curling down. Okay? That's that disqualifier that I was referring to earlier. She starts curling against us, especially at a 45-degree angle, and that's no trade. Okay? So again, on crude oil, we're just going to stand up parade rest and do nothing. Okay? Cancel the trend line, move on. Okay, there is the close on the other side of the MA1. We take it, left click on the 1, drag it to our entry. We have no risk on the table at this point. Okay, the only thing that we pay for if we get stopped out is the commission. If you want to cover that and some, +1. Okay, now you have no loss on the trade no matter what. Okay, you bought it at 62. If you get filled at 63, you made 1 tick. Okay, everything's covered. Okay, so you can let it run. When do we get out of it, Bert? Good question. When the green line gets into the cycle, right? And price should follow along and make a new pivot high. It's doing it now. The green line is in the cycle, right? The green line is getting into the cycle. Squeeze that bad boy up. Okay. It's making a new pivot high. Okay. Now, as an observation, the fact that this is squeezed up together, we have some resistance here before. Here's what I would do. They're together. Exit at market and cancel. Get out of the trade. Period. Okay? But what if it keeps running? Well, it does. The idea is the green line gets into the cycle, pulls away. Gets into the cycle, pull away. Okay? So what we would expect to happen is market to come down because green line's going to come down because it's supposed to pull away. Okay? Here's that example where here's the one that works against me, where Michael's got it blown up like this, and he's long. He caught this one, and Bert's sitting on the sideline, or you're sitting on the sideline blaming me because I said, hey, this isn't so good. Okay? Again, this was a good example. Okay? So anyways, that's where we sit on the British pound. Okay? Okay, let's switch guns here. Let's go looking around again. Ooh, bullish close. Did the normal thing. We draw a trend line. If you're looking at the Mexican peso, that's how your trend line should be drawn. Here's the pullback to the BBC. Bullish cross. Eyes gravitate toward the slingshot. Uh-oh. Three things pop up. Number one, it's a different color. Waters down the probability. Number two, a close above this trend line has to happen before you take action. And three, it's actually got a bearish slant to it. Okay? No trade. Has that disqualified. Aussie dollar. No, nothing going on there. Canadian dollar. No, an opportunity there. By the way, this doji right here. This is referred to as a doji. That's something you kind of crave when you're looking for the market to get back to the BBC or that green line and close in the direction of the trend. That's kind of the stuff you kind of drool over when you see it. Okay. Market rejected that level pretty hard. All right. So here's the scoop. It's 2 o'clock. All right. We spent an hour. Probably spent like 40, 45 minutes because I went over the disclaimer and I broke down the rules. All right. So the takeaways today. Number one, brand new. Here's your exposure to the trade setup in slow motion. These are the rules. These are the rules I just went over in a live setting. Okay. Number one, the market needs to be trending. Get in the habit of hitting the zoom out button. Okay, that'll keep you out of some traps. Number two, a good habit to get into. As soon as you get the cross, engage the trend line. Okay, we do that for a couple reasons. Obviously, if the market can't get to that green line or the BBC, that's one reason. The other reason is if the cycle inside the slingshot turns a different color on us, well, we know a few things have to happen. Number one, it waters down the probability, but we have to close on the other side of the trend line. Okay, so that's another reason to be drawing. But you're in a position, okay, to take action ahead of time. All right, so that's why you want to get in that habit. You're already past that stage. Okay, keep an eye on the cycle. Okay, we just talked about it briefly about the color of it. Okay, Make sure it's the same color if you want all the probability stacked in your favor. But if she starts curling over, if she's doing here, that could be a problem. Now, in the room, there's a good chance Michael is game on with this trade. Okay. The rule is a 45-degree angle. Okay, a 45-degree angle against you. That's if you take one of these squares and just cut it diagonal. Okay. But I would caution, that starts curling against you, then you're asking for trouble. Okay, so be aware of that. Okay, so just a few takeaways. All right. If you have any questions, you can always go back to this video. I record all of them. They're on YouTube. If you go to YouTube and search CFRN Thursday, they're in there every Thursday. Okay, and you know, I kind of sound like a broken record. I go over the same thing over and over and over and over again. But there's a good reason, because you're just getting into that frame of mind. It's rules based, so you're just going through the motions. And if you kind of go through it like a robot and train yourself like that, then when things do happen, like I said, you're in a position to take action. Okay, so that's the bottom line. Again, the goal of this was to give you an eyes wide open approach, especially if you're on the trial, so you know what you're getting into. Can I do this? Do I want to do this? You know, that kind of stuff. Can I absorb what's going on? All that stuff is good. All right, so that's it. I'm going to shut it down. We'll see you in the room in the morning. If not, I'll see you next Thursday.